Hey, what's up, guys? Oh, I didn't know I can speak. I'm sorry. Uh, all right, so I'm sorry, guys. All right, give me a sec. I swear. I was being such a muppet. All right, I was just trying to look for something. So here we have. We're taking a long on CL, right? I already made money on an AS, sorry, an NQ today, but I like this setup. Even though the order flow is bearish, I'm still taking this. Where are you, baby? And I'm gonna try and explain everything on this video. God damn, I can't draw to save my life. Okay. You guys can see. It's an actual account. It's a fresh one. I have multiples. I made this one just so we can practice on this bad week, right? So, yeah. You can see this. There's a lot of things here. I'll explain it in a second, but I just have to make my shisha right now. So we have a volume imbalance. We respected. I was gonna add another contract there, but by the time I zoomed in and realized I was not speaking, I missed a chance. But it's okay, because if it goes against us, then we won't be too over leveraged. Because right now I'm very over leveraged. 2 contracts in CL. God damn. Anyways, anyways, let's have a look what's going on. So as you guys can see, we have a sweep, Josh, FEG, beautiful aggressiveness and displacement in price, all the stuff you want to like to see. However, we have 2 things that are in our way. We have the NWOG, which is that green rectangle, and we also have a very bearish order flow on all time frame for the past this whole week actually. So you just want to make your money and get out, right? So you just want to make your money and get out. Basically, that's all you want to do. Right now, I'm pushing the toes, so I might just take like maybe a partial here and then let the rest run, or we can just get stopped out. Well, you can't really know. You just have to anticipate. But right now, I like what I'm seeing. We also these rectangles right here. I might make a better video, okay? But I just want to record that. So this is the top rectangle. My hands are my hands are wet with the tobacco for the shisha. Anyway, the first rectangle at the top, the big one that start from 73.40 to 73.20, that is our breaker block. All right. The middle, small, very tiny rectangle is an inverse. Actually, it's not really an inverse. No, it's just a bullish FEG from 7:30 a.m. All right, you can still use these. These are not supply and demand. You can still use them even for the next week. All right, and in the middle, we have the FEG itself and the big rectangle at the bottom that starts from 72.90 or 72.95 to 73.20. Where our entry is an order block, right? So I always say the first red candle, the lowest red candle before bullish candle with an FEG is the order block. However, we have 3 consecutive candles, very small ones, so we can count them as one single order block. And as soon as the price goes above all 3 of them, then the top one becomes the most important one, right? Another gem from Luke. So I'm gonna make a video about the mean threshold of an order block and the opening price of an order block. When do we use which, right? This is probably a question you guys don't know how to ask. But it's probably a question you guys are extremely interested. Like I would deem you guys extremely interested in learning about that, because it's a question about it's a question about something you want to question but you don't know how to question it. You know, sometimes you get those kind of questions. So just like that, guys, we just made $350, and I'm gonna try to close my first TP here. Actually, we did reach it. Damn it, I wasn't paying attention to my screen. And then we can let another one run. Damn it! Sorry guys, my laptop ran out of charge. Wow, thank God I have stop loss, and I just realized I have one stop loss here. So, yeah, I wanted to take my TP here at this high or maybe at this FVG, but as you can see, price came back to it and just rejected, right? So we could have made, we were at $400 plus. We could have closed one of the contracts for $200, put stop loss at break even, and be content with it. But right, that's why you watch the chart while you're trading, right? I'm literally doing some shisha while we're doing that, right? So you can just watch and see how this thing goes, right? Now you could have moved your stop loss up at break even, but I told you guys that I want to see this FEG remain open, right? My stop loss is here, but my eyes, I'm not waiting for it to come back to hit my stop loss, right? We have a lot of confluences here. We have a breaker block, we have another bullish FEG, we have another FEG. So this here becomes an ultimate unicorn entry. We also have this order block, these two order block here. So this should hold the price right, that should hold the price down, right? So I'm watching, once one of them get respected, then I'm looking for the next thing. If another bullish thing, if two bullish things get disrespected, if two bullish things that support my trade get disrespected, then I will close the trade, right? But my safe stop loss is just there. Doesn't mean I have to wait for it to hit my stop loss. But yeah. So we're gonna see what's gonna happen, right? So now we might just elongate for really long time, and then I'll keep it running until my shisha is ready. To be honest, I don't even know if you guys can hear me. All right, so stop loss is there, TP there. We missed our TP and that is completely our fault. And I don't like the fact that we felt building these red wicks, right? And I expect them because that area is a really extremely important area for the bears, right? We have an NWOG, we have a fair value gap, we have equal highs that we swept. So it's looking really ugly right down there, right? But it's okay. I'm gonna hold the trade until it's no longer a trade. You have to assume the risk, okay? You have risk to assume. If you can assume the risk, you can take the trade. If you cannot assume the risk, you, my friend, cannot take the trade. Am I still recording? I'm still recording. I'll be back in a sec. Okie dokie, I'm back. Let's see what's happening. Alright, we gained that bullish momentum once again. Good stuff, good stuff, good stuff, good stuff. So, if we're bullish, I want us to close above the midpoint of this. So right now we're respecting it, you see? That's not good. I want us to close above this. Why, Luke? Why did you choose this wick? What happened to my voice? God damn. I'm sorry, because I wasn't expecting that. Because the algorithm reprices to an FPG, to an order block, to a breaker block, to an NWOG, etc., just as it does to wicks. Because nobody in the world, I mean, very few people, except you guys, look for wicks, right? It is an important place. It's a significant place, rather, I'd like to say. Algorithmic signature or a place, a reference point for the algorithm. Okay, so just like how you want to respect the FPG, you want to respect the order flow, and the best way to do that is by checking these wicks, right? So right now we're respecting it. As soon as we close above it, we should be Gucci. But right now we're still having resistance, right? So you might be saying, why the price coming back here and just rejecting up and down? If I go on the 1 minute, you're gonna see that multiplied, right? Look, we had 1, 2, 3, 4. We're just chilling here, right? It's not a random place. It is not a random place. If I go on the 15 second, now you can see here we have a cluster right now. Candles just chilling here. And this FEG as well, right? So I want us to bounce up real quick. We're respecting midpoint of that right now, which is good for me. So let's have a look and see what's going on. That should be good. We can close one of our trade here. I think I can close just the whole trade, right? I might consider just closing the whole trade, because that's 220. That would be 440 bucks. If we wait for here, it would have been 1k, right? So we'll see actually. If we get that is if we get there, right? We might not even get there. We might just get hit our stop loss. So you can't just be saying, this is what I want to tell you guys. You can't be just saying, if I hold and price goes here, then I'm gonna be a millionaire. Oh, if I hold a bit longer and put my stop loss right there and put my TP right there, then I would make it $500. Oh my god, great. No, you shouldn't be doing that, because if you do that, then you're just expecting too much, right? You shouldn't be doing that. You have an execution. Right now, I like my execution. I like my trade. I'm just focused on managing that trade, right? By manage, I mean, as you can see, I mean holding, like staying focused, taking reasonable TPs. I'm paying myself at this high. If it gets to me, I'm paying myself at this high. And I'm going to probably let run maybe in the NWG, because I don't think we're going to go above this. The order flow is very bearish. And then maybe right there. But that's very highly unlikely expectation for me, right? So what I would do is, let me try something out. Whoa. Ooh, fancy. All right, we'll see. This market is really slow, so I don't want to stay too much in here. So I might just close all my trades here. All right. And now notice, guys, the midpoint of this wick. Now notice the upper portion of this wick, because these areas are not zones, guys. They're not zones. They are. God damn. They're quadrants. They're reference points. Okay, each area represents a reference point. So right now, we're still respecting this, but I think we might stick above it. I hope we close above it. If we do, then we might start rejecting here, and you can see it came very shy of it. But we'll go on the 1 minute and see if we can get some more data. So far, not a single candle closed above it. That is bad, but we'll hold. So most likely, I'm gonna try to close my trade here. Maybe another one here. How many ticks is that? 40 bucks extra. Not worth it. Not worth it. What about the midpoint of 740 bucks extra? Yeah. We'll see. I think we can get up there, but I'm not too familiar with this market, right? So if it was a different day, like non-holiday day, sure, we could have. There we go. TP hit, boys and girls. And we fill all the way there. Oh, just one tick shy from my maximum TP. Damn, I don't know. I might consider closing. Guys, look at this. It's one tick shy from my maximum TP. Alright. Okay, I'm gonna just put it back at this high. Hopefully we'll get that too. And that would have gave us come on. Alright. Go on there 1 minute. Yes, boy, let's go. We hit it. I was gonna close here, but then we got this extra as well. We'll probably come back here, like, or maybe where would our next point be? If we close above the NWG, we can come back to this area here. But I'm content. We hit our TP. We had beautiful entries. You guys saw it live. You guys saw me. I was chilling, even though I was in the negative. And it's a live account I showed earlier in the video. So I entered here at the FVG. Price came back down. I entered the midpoint of this FVG. And I had my stop loss here, but I was ready to close it anytime. And I told you guys, I don't want to see this FVG be filled. I want it to remain open. And the reason is, this is one of the gems you guys write down, is this order block here should prevent the price from coming back down. This breaker block should prevent the that thing from going down. You can see that the bodies are all inside the breaker block. Only wicks are allowed to go back there. And there you go, guys. Let's go. Woo. All right, peace. Let's see if it goes here. Maybe. Hey guys, so we did. I ended the video, but I just started it again. You can see we came back here. Initially our maximum target. This would have gave us 1k move, right? 1k. We ended up with half of it, about 500, just north of $500. But that's more than enough, guys. I cannot stress enough. You don't have to make a K a day, but you can see that since the price gives us opportunity to make a K, like a grand, a key, then that means we have a high probability of getting at least midway of that area, and that was our TP, right? Like, so it's high chances. The game trading is a game of probabilities, and you want to have the highest probability, right? The probability of comeback all the way here is pretty high. It's all right, not bad. Like, it looks to me like a very, very nice trade. But the probability of if this gives you a nice opportunity to go to nice probability to get there, then what do you mean? What do you think about the midpoint, around the midpoint of this area here, like the midpoint of your target? Then that would be exponentially increased drastically. Actually, it would become like much more probable, right? So, and then that's what we acted on, and we will contend with that. So yeah, hope you guys enjoyed.